Is this the bottom of the stock market? This is what we're going to talk about today. We're going to talk about, is this potentially the bottom of the stock market, as the stock market had a fantastic week last week. Personally for me, my stock market portfolio was up 12% last week, which was amazing, but there were so many stocks up a huge amount, and that's what we're going to go through today and give my thoughts on that. So I hope the video's useful. Now, I'm sure you're pretty much aware of this if you're watching this video, is that since November time, the stock market has been doing awful. For a few stocks, it's even been pre-November, but November's like the official accepted date of when we started entering a bit of a bear run in the stock market, and the last few months have been horrible. And this week, even though there's been a few attempts in the previous weeks, this week was a pretty good week for the stock market. And the thing as well with the stock market this week is it's avoided the horrible bloodbath of Friday. The last couple of weeks, we've started to see a couple of days where we've had maybe a good Tuesday, and then eventually we might even have a good Tuesday and Wednesday. But then when it gets to Friday, the stocks have just absolutely sold off, and that's normally the day that's taken as negative for the week. But this week, it didn't do that. The Friday was very nice to us, and what that led to is the Dow, or a lot of the stocks and a lot of the indexes, put the best week in since November 2020. Now, the thing about November 2020, why that date is so key, is because you might have forgotten, that is when we were coming out of the CV situation, and we had been on a pretty good run going into November, but that's when we got the vaccine news. And when we got the vaccine news, everyone was like, okay, we're kind of moving towards the end of this, and we went on a massive run. And yeah, the best week since then. And the big thing to remember is that, first of all, it's very hard to predict when these best days, these best weeks are going to happen, and this is why you can't time the market. There's it might not be the bottom, but just from a point of view is that if this is the bottom, if this is one of the best weeks in the stock market and you were trying to time the market, you might miss this week. There was nothing out there that was clear to suggest that was going to happen, and if you try to time the market, it's just that quick that you miss it. You miss one of the best weeks in the stock market. And as well as that is unfortunately, with this pain that we've been in through the last period of time, when we do look at let's just take the S&P 500 for example. In this period of time over the last kind of few months where it has been a little bit ugly, that has led, unfortunately, to a lot of retail investors leaving the stock market. We've talked about it plenty of times on this channel at the moment. Unfortunately, these best weeks, these best rallies always come out of the stock market having a horrible period and going down, going into bear markets. And when it has that rise out from that, when it has them, we've talked about this so many times before, is that when we eventually do get to this point of view where we do bounce out of this ugly downtrend, stocks will do this. And this week was a taste of what will happen. This is what can happen. This is what happens when you have stocks that are just so sold off so quickly and gone down so much and down at so low valuations that it's like elastic band. Eventually you release it and it springs up. And we've talked about this so many times that when this was going to happen, and if this continues to happen, if this is the bottom, we will see massive amounts of rebounds in a lot of these stocks. And unfortunately, this does come after the periods of massive dips. And unfortunately, as we've talked about, a lot of retail investors have left the stock market in the last few months. Unfortunately, when the negativity comes, that is normally the best times to buy. But why doesn't all the retail investors do it? Well, because what you've seen here, unfortunately, it gets to retail investors. Retail investors exit. Even some Wall Street money's on the side at the moment, and that needs to come back in. But unfortunately, these dips do get to real retail investors, and they sell out. They sell losses. They leave the stock market. This time is going to be different, or this time it's going to go even lower. We've seen it with YouTubers. The big YouTubers were trying to time the market on this sort of dip, and unfortunately, this is why all you can do in dips is just hold, buy the dip, and when that rebound does happen, it rebounds fast and you will go on to make money. And this is a taste of that. That is a taste of, this is 1 week of that period of time. What normally happens in a lot of these bear periods of time is they don't last that long. They last maybe 6 months, maybe a year, maybe a bit more if it's a massive amounts of dips, with a lot of problems going on out there. But if it's not that, it's a normally 6 month, maybe a year period, it's a bit of an ugly time frame. But what happens afterwards? Well, that's the time periods when you go on really good runs, and you go on longer runs than bear periods. And if you bought the dips in that sort of period of time, that's when you get the rewards. And this week was one of those. It was a taste of, that's 1 week of getting the rewards, not when we actually go on another good bull run and then rewards keep coming in for a longer period of time. So this was kind of a bit of a good point to see like the rewards of buying the dip, after so long of negativity, just to kind of get that little hint of hope of this is what it will be like. Even if it's not the bottom, even if we do go lower, it was one of those, a little bit of a taste of what it would be like. And if you look at the indexes were up. The S&P was up 6%. The Nasdaq, which was sold off a lot more in bear territory, was up 8.5, and the Russell was up 5.37. And when you do look at that, this is just this little rebound here. We've got plenty of room to go. That's the thing with a lot of these indexes right now. This was, like I said earlier, just a bit of a snippet of what can happen. Now with these indexes up, 5%, 8%. What happened to a lot of the individual stocks? Well, Boo had a good run, that was up 9%. Cake Box in the last month is up 35%. Some of the US stocks, Shopify was up 27% in the last 5 days. PayPal up 23%. DraftKings up 23%. InMode up 12%. Square was up 40%. Huge move from Square. A lot of the fintechs have been absolutely down a huge amount. So it was good to see them bouncing back. The likes of PayPal's, SoFi. Alibaba, same again. Chinese stocks, Chinese stocks have just been associated with massive amounts of risk over the last few months, and that one bounced up 34% as well. And this was always going to happen. We talked about this so many times on the channel, is that where the indexes were down 10-20%, normally, when you have the more individual stocks, the more high risk stocks, is that they normally drop a lot more. But you're talking 30-40%. A lot of these individual stocks, like Shopify, was down 60%. This is the big thing. This is why a lot of these stocks are rebounding so quick, which we talked about, is because they're being sold off huge amount. When you sell them off and the valuations just go low and low and low, eventually when that negativity goes, that elastic band's released, we have a massive rebound, and that's what we're starting to have here. And also another point is that what you've seen is, you've seen a lot of value investors come out. You've seen a lot of value investors, a lot of index investors kind of go, oh, this is why you can't be in the market. This is why you just buy an index fund. And over the last kind of couple of months, you've seen a lot of value investors start to get quite loud and going, oh, this is why you're investing in companies that, do 3-4% revenue growth a year, you pick your dividend up and everything like that. They've been really loud over the last few months. Now, why have they been so loud over the last few months? Well, because the indexes have gone down and these stocks have been punished a lot more. And that's what normally happens, because they are higher risk stocks. They do go down a lot quicker than a lot of the indexes, a lot of the value stocks. But why is it the last few months they've only just started coming out? Well, what happened previous to that? A lot of these stocks have been on really good runs where the indexes went up, still had good returns of 30-40%. A lot of these stocks were returning, the 100, 200, 300, 400% returns, massively outperforming. And that's was very key here, is that, when the negative market does come, these stocks do tend to, fall down a lot quicker. But it's the same way as that when we go up, these stocks outperformed them by a huge amount, and that was clear this week as well, where the S&P was up 6%. You had the likes of Shopify up 27, 23, 40%, 34%, and that's the really key thing, and that's what we've been talking about for a while, is that sure, they go down a lot quicker, but they go up a lot quicker as well. And the things that you have at the moment is a lot of these stocks have been sold so too heavy off. Valuations really low down. And we've been talking about this for a long time. It was only a matter of time before this started happening. And if this is the start of or a bottom of the market, this is what a taste of what the rebound would be like. So I guess it's the $1 million question time. Is this the bottom? Well, this is what I'm going to say on this. Obviously, I cannot predict where the stock market is going to go in the short term. No chance. No one can. I can't tell you if it's going to be lower next week or higher next week. I can't tell you that. But what I will tell you is this, and it's what I've been saying on the channel for a very long time. Over the last year, what has happened to the big tech? They're still at quite high valuations. Not cheap. They're getting a bit better, but they're not cheap. So I'm not sure what big tech will do this year. Mid caps, so cheap. I mean, look at this. It doesn't normally, it's very rare for them to get down to these valuations. They only normally get around to these sort of valuations in the stock market crash. These are very low valuations for mid-tech. So even if this doesn't get to a high valuation, even a mid valuation, this is so sold off. Valuations are so cheap. Same on the small caps, so cheap. They only get to these sort of prices, these valuations on a forward basis, at 14 at the moment. They only do this through stock market crashes. Normally this is at midpoint 16, 17, 18. So that these stocks at the moment are so cheap. And when you are at valuations, which these are at the moment, they cannot stay down here forever. They cannot stay down at extremely cheap valuations forever. Eventually they have to move in the right direction, and this is what a lot of businesses are doing. They're performing in the right direction, and sooner rather than later buyers will come in, Wall Street will come back in, they will put that cash in here, and a lot of these stocks will go on very good runs, especially down on these valuations. So even though I can't tell you if this is the bottom, I can't tell you where the stock market will be next week, what I can tell you, it is a matter of time before we see a rebound like this. And I've said it before, I still think small caps and mid caps, even though the first 3 months have been a bit rough for them so far this year, I still think they will have a very good 2022, because history tells you they can't stay down at these valuations forever. And as I said previously, when that rotation does happen, it's like a slingshot. They will bounce back in the right directions, moving 30, 40, 50% quicker than what you can blink. And that's why you also can't time the market, because you don't know when that day is going to come. All you can do is average in on great companies and you will get the rewards. And this was a prime example of it last week. Out of nowhere, boom, 23% up, out of nowhere, boom, 40% up, and you'll miss it so quickly. And that's what can happen in the stock market. It can change very quickly, especially when they're down at these sort of valuations. And just getting to a history point of view, so from a history point of view, this was a really good tweet, which was, history was made this week. For only the 5th time ever in the S&P 500 gained at least 1% for 4 consecutive days. This is a rare occasion. It is also quite bullish, as a year later it has been up more than 20% every single time, with an average of 28%. So you can see the last times, this 5th time, but the other previous 4 times this has happened over the 12-month period, it returns 28%, 23%, 27%, 33%. So you can see here it's a very bullish sign of this happening, which has happened this week. And that's the other thing that you can go off. You can't predict where the stock market's going to go, but you can use history to tell you where it's going to go, and it's a very positive sign, and I can see this happening. And also the valuation point of view, valuations are just so cheap that we've seen before. They can't stay down at these sort of valuations forever. Down at a 14 times forward earnings for small caps. Look at the rebound there. Same again, look at the rebound here. It's not even gone that low this time. Same again, look at the run that it went on. It's only a matter of time before this has happened, and we've talked about this on the channel plenty of times. This is what will happen, unfortunately. What will happen is retail investors, even though these are the best buying opportunities, they have been selling out at losses. The fear has got to them. These are the best times to make money. You buy the dip, you don't time the market, you hold great companies, and when that rebound happens, which is going to happen, history tells us that will happen, you will get the rewards. And this week was a taste of it. Now, we don't know if this is the bottom. It might go higher, it might go lower, but history tells us sooner rather than later, this is what will happen. And this is a taste of, it was good to kind of have a taste of that rebound for a week period of time. Now you imagine what that will be over a course of a couple of months, and the run that we will go on. So it was a very good week in the stock market. It was a taste of the rebound, and even if this isn't the rebound, this is what you can expect going forward. So obviously if you're still watching this, you're still probably holding your stocks, you're still thinking about that rebound day, and I think last week was a bit of a taste of it. So keep holding in there. It will come sooner rather than later. So I hope you enjoyed the video, and I'll catch you on the next one.